Oh, I love your disclaimer, by the way. That disclaimer was fabulous. You want to read it now?
Yeah, I'm going to open up the disclaimer here. We have a new disclaimer for everybody. And I started researching disclaimers. I figured we should have one because some people act on the things we say. So this is the disclaimer I came up with. Number one, nothing we say should be taken as financial advice or as recommendation to do anything. Everything we say is our opinion collectively or as individuals and no one else's. Not anyone sponsoring us, not anyone presenting us, producing us, in a room with us, or appearing on one of our shows. It's just our opinion. Number two, any data or figures we provide represent our past performance, either individually or collectively, which of course is never an indication of future results, or it's data we researched from sources we consider to be reputable. We cannot guarantee the validity of any data we represent here. And you should consider this part and parcel to your research and discuss anything we say with your financial personal advisors before acting on anything we say. If you act on anything we say, the responsibility for the result of those actions is on you, not us. We will not take responsibility. As we've told you already, we might be wrong and we might be idiots. We don't think we are, but history might disagree with us. And third, sometimes we cuss and use what may be considered offensive language. If you're easily offended, we preemptively apologize and suggest you stop listening. We use this kind of language because that's how people talk in the real world. If you're interested in our opinions and are offended by this kind of language, please let us know, and we'll do our best to accommodate by using softer language and replacing cuss words when possible. However, we will most likely fail at this. That's our disclaimer.
And you know what? One time, and everyone who watches this show doesn't give a shit about the things we say, but I did receive about 4 different notes when Brianna Watley's 17, and they said, Jim, you should clean up your mouth when Brianna's on. And I'm like, yeah, you were absolutely right, actually.
Probably not wrong.
I apologize.
Probably
so we will admit when we are wrong. And if we have Brianna on again, which I so hope we do, I will not say shit.
Hey, Bob?
Yeah.
Can I put my disclaimer on the screen?
Yeah, put yours up.
All right. If you're taking anything I say seriously, then it's your issue, okay? That's what we got here. If you take it seriously, there.
You're looking at charts when you die with a hat.
No, and the reason, guys, we don't know how deep your pockets are, what your risk tolerance is. We don't know things like that. We just talk about, that's why I don't give advice. I tell you what I'm doing, what I'm looking at. Let's roll, by the way. Mike, real quick, I like to begin all shows with some really important, not free speech issues, which are also important, but the Taylor Swift psyop. Is it a psyop or is it not? What's happening with Taylor Swift?
It's not a psyop. There we go. Don, can we?
How do you know it's not a psyop?
Because the mere fact that everyone's talking about the psyop
with a Grateful Dead T-shirt on.
What did you say?
Guy with a Grateful Dead T-shirt on.
Well,
so the whole
Grateful Dead wasn't a psyop. They were who they appeared to be.
Well, the Grateful Dead, was involved with Julian West and MK Ultra and Chaos in San Francisco and Haight-Ashbury a little bit too. So the Grateful Dead is part of a psyop, a little tangentially. Did you ever read the book?
Chaos is a fantastic.
Well, all right. I haven't gotten off the bus yet. All right.
We are going. That guy who wrote Chaos, he's got an Irish last name. I can't remember what his name is. He said he'd consider coming on. And for you guys, again, we're not getting paid. He's not sponsoring us. The book Chaos is fantastic.
It's fantastic. I read it all the way through, and then I loaned it to my brother-in-law. He read it all the way through. It is a fantastic book. And for me to read a book that big, that long, it was really, really good.
Right. And it's so funny because it really draws no conclusions.
Right.
And that's fine. He just gives you all the info. It's amazing.
I love how he tells you, in this book, he tells you he was starting to write an article and it became a book.
10 years, a 10-year-long book, right?
Yeah. Chaos, Charles Manson, the CIA, and the Secret History of the 60s is the name of the book. And the author, what is his name? Tom O'Neill.
It's O'Neill. Okay, right. Yeah, O'Neill. Yeah. And by the way, it'll blow your mind. Yeah, Mike, you got to read it. If you're not a conspiracy theorist, that just means you haven't read enough.
Okay, Taylor Swift is a psyop. There you go.
Okay, good. See? How easy was that, right?
Yeah. Great book.
Moving right along. What do you want to cover first?
Well, I'd say we just go to the S&P.
Yeah,
So,
that's speaking my language. Let's roll.
We just keep marching higher. And by the way, this is a monthly chart. I just thought I'd put it up there. The only thing that would ever give me major concern is we still are in monthly double top territory, but nowhere near triggering. In the shorter term, because I keep hearing so many people say, not everyone, but so many people say, oh, is the market, it's overextended, is the market going to crash? Well, a crash is a rare occurrence. B, could it pull back? Yes. C, are you trying to call a top? You're probably going to be wrong anyway, so stop trying to call a top. Here are my levels that I'm really watching. In order for us to start doing intermediate, this is a weekly chart. So we went up how many times? Because I miscounted it before. What was this? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9. A 1 week pullback. 1, 2, 3, 4. So you don't want to try to call a top, especially, and we could get a short-term pullback. We got a 1 week pullback before at the beginning of January. We could get another 1 week pullback. That doesn't mean a top. Now there are exhaustion signals. There are some DeMarket exhaustion signals. There's some Elliott wave exhaustion signals. But personally, I would not be acting on stuff without at least a daily close below 4,800. 4,800 is the first key line that we could be extending into a bigger pullback than, just 1 or 2 weeks. The next major line in the sand for me is 4,450. That means we've probably, and again, you're going to have bounces even if we get pullbacks, but if we close below 4,450, then we're going to probably into a more medium term pullback. So those are my two major lines in the sand. Because if we get down to 4,450, we're below the 8 EMA, the 21 EMA, and the 50 EMA. More importantly, it would be a close below the 62.5 harmonic, which tips. Look, see, now you got me saying trips.
Tripping, yeah. MK Ultra, Chaos, Tripping, the Grateful Dead, it's all coming together.
There we go. Okay, so we tip to really probabilities that we could retest the October lows on a close below 4,450, and that other level I told you, which is the shorter term pullback could get a little more extended, is 4,800. That's all I need to know. If we continue to break out, I'm still expecting a magnet price to at least get above 5,000. And even above 5,000, none of those levels, they might be updated a bit, but you can roughly keep those right around where they are. And if we keep going, because you got to prepare for both sides, although the upside's easy, the next major target is 51.35. We've hit the targets I put on last time have all been hit besides that.
Bobby,
Yeah.
if I'm asking you, like in my medium and longer range portfolio, it's gotten a lot, it's gotten over its skis quite a bit because of the huge rally we've had. Do you use options or do you just rebalance?
I use options.
So do I. But what do you do?
From this
Give me some.
perspective, I mean, actually, a couple of years ago, Mike and I wrote a book called Rent the Bull Market, Don't Own It. And we never did anything with it. It's actually still sitting here on my computer. We never put it out. But this was kind of the concept, is when things get into these ranges, these extensions, so to speak. This particular rally that we're seeing off of the lows, that happened in October, could be a multi-year thing. And so to me, like exiting the market here because it's overdone is silly. So you could do things like sell calls. You could buy put spreads. You could exit a little bit and put some, buying levels down in Mike's areas there if you see that it's actually compressing and getting through some of his levels. But this is where I like to take money out of the market without exiting a position. To me, the best way to do that is options. Mike, am I wrong?
I mean, there's multiple ways. That's really where I look at where the implied volatility are, especially for if you're going to do anything with put options. If it's really low implied volatility, especially we're getting overextended. Yeah, I have to. One thing is, we've talked about it before. I always, and this isn't always, We'll use options to hedging during that September option time frame. Other time frames, I will, if a stock has gone on a massive run, I will rebalance some stuff to lock in some stuff so I don't go incredibly overweighted from, if you're looking at a portfolio from a market cap perspective, or way lopsided gains. I will lock in something and rebalance just on overextended things, but that doesn't mean that I won't use pullbacks to either get in new different positions that could be still a good chance of running farther, or if it's a deeper pullback and I absolutely love it, getting in the same position again and re-add. But it really, before I just blindly go to the options, it really depends on where the volatility and what option strategy I'm using too, because there's lots of ways to hedge to the downside rather than I'm just going to buy some puts. I mean, there's lots of things you can structure, especially if you have targets and or key levels that you can structure. And then it always depends if I can get the option position built appropriately or not.
Okay. So I agree with all that, by the way. So to kind of put a finer point on what we just talked about, the S&Ps, there's no reason to think it's reversing yet, but there's also no reason to be a pig. 4,800, 4,790, I remember you said last week too. So that's still where I'm looking at. A settle below there might get me interested in being short, but at this point in time, there's no reason to. Is that a good synopsis?
That's a weekly settle, right, Mikey?
You could do it on a daily.
Okay.
You could do that first one, the 4,800. If it closes below at that level on a daily, it probably means, not guarantee, again, there are no guarantees, but it shifts the probabilities to where we will retest the possible beginning of January opening area of the first week in January. The probability shifts for at least a test down to that levels. So, that's where I look at that, which then if that level were to break, there's another warning sign. And then that 44.50 is really key at this point.
Makes sense.
What's interesting also on the daily, if you look, I just switched from the weekly to the daily. The 200 on the weekly is now all the way up to 44.75 roughly. So that 44.50 then would be a key close below the 200, which then you would have lost everything on the daily. I mean, I don't mean profit wise, but you would have lost. The 200 is pretty much the remaining last thing that a lot of institutions do watch, and it's become a self-fulfilling prophecy nearly.
All right. Moving right along. What do you got?
NASDAQ, this is not a double top because it again, for the people who are tuning in who want to know is that a double top? No, it's a multi-top. If you want, my rule of advice is if you're trying to decide if something's a double top on like a daily, look at the weekly. And here's the weekly. There is no double top. It's just you can't even find a rotation in there. So that's a quick little rule of thumb. However, we actually have a triple top. This is looking like it's going to break out again. Same thing. We have potential major topping patterns, but they have not been triggered yet. The next major cluster area is about 17,920. And then above there, we're looking at roughly about 18.3 to the upside. Now, in the shorter term, the area that gets me saying, is roughly a close below 16,850 in the NASDAQ. That's the first. We could be going to retest the early January lows. And then the major line in the sand, and this is a daily chart I have up, is all the way down at 15,700. Here's the weekly chart. 15,700. That would have mean you chipped your problem. Oh, sorry. That level is wrong. 15,500. 15,500.
The first one was 16,850, Mikey?
16,850, yeah.
Okay.
Yeah, 16,850, then 15,500.
Can I ask a quick question?
Sure.
Is 16,850 roughly the equivalent of that 4,800 level in the S&P?
Yes.
Will they get there at the same time?
Yep.
Essentially, right? That's what I thought.
Yes.
Yeah.
Those are the
Okay.
two. And that means that I'd sit up and take notice. Anything, even a pullback in front of that, is roughly just a standard pullback. You start losing 16,850. The probabilities drastically start shifting, and you've lost all the key moving averages on the daily.
Makes sense. Okay.
Russell, there's really not much to talk about with the Dow, other than it hit another key harmonic target just now. 13,881 was hit on Friday. But more interesting that you can watch the S&P and the NASDAQ. Those will give you the early warning signs. The Russell, which did not, I think I listed up the 2025 level because I know I've talked about that repeatedly. 2025, no, that's the 62.5. We got really close with the close. We got to 2022.8, but no close above. It was technically 2024.9, and then we sold off. If the Russell starts breaking down and we get a close below the low close from January 17th, and that close is 1925. If we get a close on a daily below that, then I'm looking for a pretty quick potential retest of the 200, which is coming in roughly about 1860.
And what percentage of a move would that be?
Low down from here, we're about 1943 to 1860. So where's the?
What's that, about 6%?
That is a drop. What is that? Why don't about 4.4
Okay.
Yeah, from today's close. From today's close on Monday, February 5th.
Okay. Interesting.
Now I'm keeping an eye on that one because that was the one I've been watching for shorts. Unless it got a close above that 2025, it has not closed above there, and we've got the rollover play. Everything else has been stronger. That's been the weakest week, and that's the play first. My personal, what I'm watching for breakdown plays, and still breakout plays because you have the insanity of the NASDAQ, which is really, really reminding me of some of the .com days. But that's it can keep going. So that's the key breakout to the upside play. Then I go look at the S&P. So NASDAQ and S&P to the upside, Russell to the downside.
Mikey, you said just now that's really reminding me of some of the .com days. What do you mean by that?
People just blindly chasing the hot stuff, period. Just, I'm taking it all. I'm just going into, NVIDIA's had a run. It was, again, Goldman today. They upgraded today to 800. I think it was Goldman. I'm getting, whereas that was the old Tesla. Tesla's a no-brainer of everything. You just got to take your life savings and put it in Tesla. Now it's you got to take your life savings and put it in NVIDIA without any regard to anything. They don't even ask me what I think anymore. They're just like, I'm just putting it all in NVIDIA. Don't have broad stuff. There's it's now just, I've asked them, what's your favorite 10 stocks? They go, I only got 3 of them at this point. Meta, Amazon, and NVIDIA. I'm like, that's it? Yep, that's all that the market needs.
So it's not necessarily something you're seeing on the charts. It's more the mood of the people that that invest. And then I got a question for Jimmy.
Here's the poster boy. This kind of price action. There's the weekly chart of NVIDIA. Okay, since the first week of January, what are we up? Nearly 41%. And it was already since the, let's just go with the lows from October. From the October lows. And I'm not saying, look at everything's based off everybody's going to keep buying chips hand over fist, and AI is going to rule the world, which is, there's always something that's going to rule the world. So since October, we're up 462%.
Jesus.
Since the lows. Okay, and people are still like, you just take everything and buy it hand over fist. It's not going to pull back. It's a guaranteed winner. And when that kind of stuff just is like, looking at the chart, it's like, okay, not saying it can't keep going, but where are you putting your stops? We don't need a stop. I mean,
So while I asked Jimmy this question, can you throw up Tesla and kind of frame the thing where the people were saying to you, because I remember this, Jimmy, Mike and I would talk about this, where like his people that he talks to on a regular basis were like, just buy every dip in Tesla. Don't worry about it. Just buy the dip in Tesla. And Jimmy, what I wanted to ask you is, you remember, like you and I were standing very close to each other when guys like Nitro and some of the other guys would come over and, can I borrow your phone? I need to get out of my red hat and then put in a buy order below.
By the way, he did that with me a bunch of times. That's so funny. Anyway, yeah.
Bunch of times. Borrowed my phone. I'd hear him borrowing your phone below him on the booth below me. You know, he'd come in, I just got to sell more and then buy more and then sell more and then buy it again. And it was just this like, why?
guys,
Bobby, why is everything so expensive? Just to put a point on this, I haven't brought my lunch to work in 20 years, and my 3 eggs and bacon used to cost $7. Now they cost $14. My wireless bill was so expensive. Why the heck is wireless so expensive?
I don't know. I mean, it feels like a car payment from 10 years ago. What you pay for wireless now? I mean, what are you paying all that money for? Is it speed, coverage, data? Is it this 5G that we all needed access to? Unlimited talk and text, which I feel like we've had forever. Mobile hotspots, which I don't use all that much. What are we paying all that money for?
This is not going to come as a surprise to you, but we have the answer right here on the Futures Edge podcast, because the Futures Edge podcast is partnering with Mint Mobile. Mint Mobile offers all these features for as low as $15 per month. It's built on the nation's largest 5G network. The reason it keeps costs low is because they sell direct to you online. They cut out the retail stores. They cut out the salespeople. It's just a much more efficient process.
Like, why should anybody have to pay more than you have to for access to the same exact network? Go to mintmobile.com/futuresedge. Also linked to the show description to get a premium wireless service for, you ready for it? $15 a month.
Okay, and if you're like people who are old, like Bobby and I, we don't like to change anything. We don't like our routines to change. Now, you want to know how hard it is to switch your service? Well, the big wireless companies want you to think it's really hard, but switching to Mint Mobile super easy thanks to their digital eSIM card, which most phones now have. You can sign up and activate immediately right on your phone from the comfort of your home. If your phone doesn't have an eSIM, Mint will ship you a new SIM card for free. How about that?
You know, Jimmy and I talk about not wanting anyone to tell us what to do, that sort of libertarian bent that we both have. Well, Big Wireless wants you to think they're the only option. So do not be fooled. Go to mintmobile.com/futuresedge. Also, again, linked in the show description, and stop paying more than you have to for your phone plan. By the way, now through the end of January, new customers can get any plan for just $15 a month when they purchase 3 months or more. This includes the unlimited plan, which is normally $30 a month. So not only are you going to save the difference between your current plan and Mint Mobile's normal pricing, but you're going to save $45 for 3 months or more if you sign up for more versus Mint's own normally low prices. Complete no-brainer. Don't even think about it. Go to mintmobile.com/futuresedge.
But maybe you should wait till after you watch the podcast. We don't want you guys leaving the podcast right now. So watch the podcast first and then go to Mint Mobile and hit that link. Thank you, guys.
I guess what I was going to ask Jimmy, do you think, and Jimmy doesn't have licensing, he's not recommending a stock here. This is just kind of a general question for Jimmy. Do you think, like, NVIDIA has a business, right? But is it a case when you look at it, it's a case where the business case is far outstripped by the stock price? Whereas people are there's going to be a come to Jesus moment where the price actually reaches the potential business they have? Or do you think, no, people should be, again, not a recommendation?
No, not a recommendation too. And I think if I understand your question, NVIDIA is the way of the future. It's AI, which, by the way, just because the fundamental story is absolutely airtight doesn't mean the stock can't pull back 30, 40%. We've seen that happen when these bubble things exist. Now, the Tesla one is interesting because I think part of Tesla is the falling out of favor with Elon Musk. Do you think that's crazy? Like that, you saw they just had a court case against him. Andrew Ross Sorkin, the video from 10 years ago when Elon Musk signed the deal that if he met certain thresholds with the stock price, Andrew Ross Sorkin laughed at it, saying it was impossible. If the stock price had only doubled in that time, he would have made a goose egg. If it had only tripled in that time, I believe he still would have made a goose egg. So it increases by a factor of 10, and then they take his money away. But anyway, I think there's a broader falling out of favor. We went through the winter, the cold winter in the Midwest, and people realized that the electric cars might not be the solution that they thought they were. And then all of a sudden, when that happens, we start uncovering things like, well, are they really environmentally friendly when you look at all the rare earth minerals that need to be mined? Tesla, to me, was never a car company. It was a technology company and a concept more than anything else. They had, shingles that were a solar. They had the power wall. They had everything like that. So the question was, can they tie it all together? And eventually, I actually think they will. But even if you've traded Amazon and seen it for the last 20 years, the fact that they didn't make money for so long eventually came home, and then boom, stock would get crushed. Now,
Amazon I want to throw something in before Mike goes over what I asked him to go over. The Tesla thing to me is I think the failing of the car company side is what hurt them, right? Because if you think about what you just said, you got a cold blast across the northern US and people realize, wow, okay, maybe electric car right now is not the best idea. That's the car company failure. The technology is still kind of amazing. So what they're doing, and like you said, the blending of the two things, because I think what Elon Musk kind of promised was that the technology in the car company was going to be not easy to put together, but they'd had the ability to do it. And the car company is the failing, right? Because if you have a car, it needs to work in Chicago when it's 11 below wind chill.
Damn straight.
And it doesn't. Yeah. Mike, so go ahead, because I remember having these conversations where Mike would be like, yeah, they're just saying just buy every dip in Tesla.
What's interesting is you're citing stuff from the recent history.
Yeah.
The part I was referring to was the blow off, which was through the end of 21.
Yeah.
That's when it changed. I'm not talking about recent history and the recent cold streak and the recent everything. They split, and maybe that was the time, but it's never even gotten close back to those levels. Yes, it's been under pressure recently. But here you see when you start doing this, with this complete vertical ramp up, then you had a pullback, but again, buy the dip, not up there, and then it slowly started making lower highs and lower lows, and it was I know a lot of people buy the dip that kept buying it all the way down, and their average price is well above where it's trading now.
And it's weakening.
And I mean, we're trading 181, and I know a bunch of people with average prices above 300 because they kept buying the dip. So all I'm saying is when you don't consider, everybody was pouring into Tesla. I'm not saying the same exact thing has happened, but if you take a look at the chart of NVIDIA, when you start getting the verticals, vertical up can tend to go vertical down. Now, NVIDIA, everything can look rosy until it doesn't, and it doesn't have to be a crash or something else. But if this peters out, whatever it is, then it starts getting a dip, and then you go back up, and you don't quite eke out those highs, and then people are still buying a few dips. And then what the real death knell to me is, there comes the next hot play. And people are like, oh, well, I built a position in this, it's going, and they stop losing they don't buy the dip as frequently because they're now on to the next hot play, just hoping, like people are still hoping, well, my average price in Tesla is above 300. It'll get back there. Well, what happens when Tesla closes below 100, which I think it will? Then it's turned into the .com Cisco play. And that's the one I will keep. Did I ever put that on this podcast?
No.
Cisco. I still know people who are in Cisco. They have prices, okay, above 65. They've been holding it since 99, 2000, hoping to break even. You know what their cost of money has been since that? I mean, you're still hoping to break even. It's 24 years later. Okay,
so
you haven't even got back to break even. You got close.
He wanted to say 24 fucking years right there. He just didn't do it.
Yeah, we don't have any 17-year-old girls on the show. You can say fucking. Yeah.
He doesn't cuss much.
All right, so you're still hoping. And this is my example. Cisco. Even the CEO of Cisco at one point said, you are nuts to buy the stock here because we can't.
Oh, I remember that. I do remember.
We can't do it. But everybody said this is a no-brainer. Internet's not going away. Everybody needs routers. Everybody needs the communications. You need it. You do still need it. It was
Still
the
true.
problem was what levels were you paying the stock? They couldn't actually, there was no way the stock was ever justified. And at some point, it broke down, rebounded, and then it went whoop as soon as, you had the dot-com bust, and then it's taken forever. So my thing is, if you're chasing the Teslas, or if you're in the Nvidias now, it's not always just a guaranteed. I mean, look at the similarities of the charts. Again, monthly chart. Look at this thing taking off. And I'm not saying this has to happen, but when you start looking at similarities of charts, this thing can keep going. But eventually, if it goes too far, Icarus has gotten too close to the sun, the wings can burn off and it can change quickly. So just know where the bail level is, know what the time frame of your trade is, and know where, okay, maybe I have to reevaluate just buying every dip and just blindly throwing money at something that it can get very overextended. This thing could easily fall back to 500 without batting an eye. Easily.
So, as
Now,
you guys know, I don't recommend stocks or new stocks, but I did make the Nancy Pelosi trade about 6 weeks ago. It was mostly a lark. It was like a joke combined with an experiment. And I bought a couple handfuls of the stock that I will not mention. And all of a sudden today, I'm like, Jesus, Mary and Joseph, like, look at this position. So I have covered half of it. But again, trim and trail. That's the way you do it. You gotta live to fight another day. I am not going to give back, a shit ton of that money. I mean, again, it was just a lark, but that's what you got to do, right?
Right. And you're managing the position, which is what we talked about, with rebalancing and other stuff. You know how to manage the position. So you're saying, okay, whatever reason you put on for it, was a flyer trade or whatever, hey.
Wait, are you bashing my reason? You don't think it's fair to follow the great Nancy Pelosi into a trade? How dare you? How dare you?
I think it's brilliant. I want literally this. I want the moment after she places any trade, not a week later. I want to know the second after that.
I don't know who told us. I think it was Unusual Whales on Twitter who put it out, and that's why I jumped in, which I'm so glad I did.
It's insane, though. I mean, I'm sorry. It's the same Hillary Clinton trading cattle futures. It's her. She must be the most brilliant trader. Some of these people are the most brilliant traders. Even some of our other politicians that don't get the name recognition, like one of them was up over 150% last year.
The guy in Texas. He's crazy. He's a Republican too, by the way, guys. We're bipartisan and bashing these shits.
Yeah.
No, it's what? All right, why are you in? If you can get, the only reasons you get these returns are you're in Congress. First off, because if you could get these returns as average Joe Schmo sitting in front of it, you might as well be a managing partner at Goldman Sachs at this point, earning millions.
Yep.
I mean, the only way you're getting it is with inside information.
Hell yeah.
I got to ask you guys to just go out because we're kind of, by the way, the title of this episode is Mike Arnold Comes Out of His Shell, but we got to go to a specific subject since we're talking about this kind of thing, because throw up the Novo Nordisk US traded shares, because one of the things that I've started to notice, I forget her name, Jillian something or other. She's a fitness influencer. She had her own show. She was on the Biggest Loser for a long time. But what we're starting to see now, Novo Nordisk makes Ozempic, right? And what we're now starting to see, Novo Nordisk, like I'm seeing headlines. I was just looking at them to the left. By the way, not telling you guys to blow out of a Novo Nordisk position, okay? Stressing that. You do it, remember, go watch my disclaimer at the beginning of the show. But look at this price action and then start looking at some of the headlines. Jillian Michaels is her name, okay? She's on a crusade against this, okay? Some of the doctors, these sort of medical influencers that I watch, whether they're cold plunge people like that Jimmy follows or it's carnivore type people that I follow, are starting to say that there's studies out that shows you lose muscle more than fat, larger percentage of muscle than fat. There was a headline I just looked at that some supermodel was offered, some plus size supermodel was offered unsolicited Ozempic. online, right? So now you're starting to get these copycat drugs that aren't real drugs, side effects. The cost of Ozempic is going higher. So some of these people are having to quit Ozempic, and the weight gain is coming back sometimes double and 3 times what they lost in the first place. So you're starting to see these headlines that Ozempic may be damaging in areas. Some people are reporting when they get off Ozempic that the cravings for the foods they stopped eating are coming back much stronger than they were in the first place. And look at this price action. Very similar to what Mike showed you on Tesla, very similar to what's happening in NVIDIA. This is going to be one of those, to me, that you keep an eye on if you got into it.
Can I comment on this? We talked about, Bobby and I did on Cow Guy about Ozempic too. And I know this is 2024 United States of America. I bet thousands of the 50,000 people who will watch this podcast have a weight issue. Even you guys understand it's not just being thin and muscled. It's the journey. Like everything is the discipline that it takes. Everything is involved with each other. To get to places without going through the hoops is never as good as getting places with going through the hoops. And there's always going to be a downside. Thomas Sowell, we say it every time. There are no solutions. There are only trade-offs. And this is not a great solution, in my opinion. But anyway.
Mike, do you mind doing an on-the-fly analysis of this chart for people who might have actually taken their own advice and maybe want to lighten up? Not our advice, their own advice. After talking to their own advisor, where do you think our critical levels on this, just kind of on the fly?
Again, this is the critical level that I'd say I'd really start reevaluating that's beyond an ordinary dip pullback is probably around $92.
Okay.
Where's it at now?
Warning sign would be about 102. Critical is 92.
Looks like 118, Jimmy, somewhere
Got
in that
it, yeah.
range. Okay, here's one. NBC, Ozempic, Wegovy linked to severe medical conditions, including rare but severe stomach problems, study finds. Okay, I just put up Ozempic headlines into DuckDuckGo because I try not to use Google anymore. Drugs like Ozempic can help weight loss, but not without ethical and health concerns. They're starting to pop up all over the place while the stock continues to fly because obviously they didn't release earnings yet, right? I think it's tomorrow.
Do you own the puts?
No, I have nothing to do with this stock. I try to stay away. What's it, today?
They released earnings last Wednesday.
Okay.
They? Hold on.
I don't know. That's more.
Yeah, that was last Wednesday. No, I'm not in this at all. But
if the puts are cheap, I would look at a put spread on this personally. I really would.
Me too. I may. Or like a big wide put fly that's not that expensive.
I'm sorry. This is again me I'm going to put my tinfoil hat on and imagine that the weakening of the American consumer through muscle loss, right? The weakening of just the American citizen through muscle loss who now thinks they're pretty, but they've still got the floppy wings, but they're 40 pounds lighter is something that I'm not going to say the government.
Yeah, but how is it a good thing? It's just not. If you can't look at this and say it just goes against something that it's hard to put a finger on, if you don't know that, you're missing something. You're being illogical. There is something missing here. A pill that makes you skinny. It's asinine.
All three of us would agree with this. When you go to your doctor and your doctor says you're unhealthy, here's a prescription that could fix that. And your doctor doesn't say, first, I'd like you to walk 10,000 steps a day and stop eating granola bars and croissants. Fire that doctor.
You have a shitty doctor.
Yeah.
There's zero question about it.
That's the majority of doctdoctors, though.
And by the way, if your doctor tells you have to lose 10 pounds, he means you have to lose 40 pounds, correct? That's the deflator, right?
Jimmy goes 40.
40. Sold.
All right, sorry, Mikey. There was a spread you want to look at, Mike. What was that?
I want to go. We talked about this a long time ago. The QQQ IWM, which is a ratio, which is the NASDAQ to Russell. And way back when, I was looking for a short. We pulled back a little, and then we went to complete. I mean, this ratio is it's the highest it's ever been. But the reason I'm watching this is this is in a really nice double top territory. Now, this could mean in order for it to trigger, you could have the Russell going down, but the NASDAQ going down faster than the Russell. And remember, I said The NASDAQ was still the thing I was looking for long plays, and the Russell for short plays. So this spread could keep going, or this ratio could keep going higher. However, just that I have a little alert set, and the ratio happens to be right at 2 where the trigger point would be. If this closes below 2 on a weekly basis, there is a potential massive shift coming in the market. It will have already started, but that's going to be one of my major confirmation points where we could then have a bigger race to the downside with the NASDAQ outpacing to the downside, which means I don't know how they get there. Then I could see starting getting the multiple rate cuts, by the way, if this thing does trigger.
Because it's a reflation trade, essentially, right?
Yeah. Or this could happen again. If inflation does not go away and they have to leave rates higher or possibly hike again, this could put a downwards pressure on stuff. Or if something really craps out, who knows what would trigger that? This is.
By the way, I'd like to change what I just said. I said it's a reflation trade. That would be something that boosts the Russell, but it also could be a come to Jesus moment of the Magnificent Seven and things that are overvalued in the NAS for that, and that could knock the shit out of that.
So this is something, even if you never trade this, even if you don't put up a ratio, the easiest way is QQQ divided by IWM and set an alert at 2. If you see that alert pop up, you might forget about it for a couple months.
How does somebody program it? If for those people using TradingView, how do they program that in?
Oh, you just go QQQ divided by IWM, price $2. Oops, not zero.
I meant how did you program the chart in the first place?
Oh, that's easy. And then you just go QQQ divided by IWM. And most trading platforms will allow you to do ratios. And you hit enter. And there's your QQQ divided by IWM.
But you can't trade it with one instrument, right?
No, you cannot trade it with one instrument. I wish you could.
Yeah.
However, this doesn't necessarily have to be traded.
Yeah, it's a
this
good
doesn't have to
technical
be necessarily
indicator.
traded. It's something that's telling me that there's something going on and things are really reversing. Now, if this closes or trades above 2.3, just invalidate that 2 level. If it trades above 2.3, the 2 level doesn't matter anymore.
I love this. This is good stuff because the biggest thing I question is when we are going to lose leadership from the NASDAQ in general and the Magnificent Seven specifically. And this could be what I'm looking for as that indicator.
And that's why I will put up stuff like this and just set alerts. And sometimes I'll forget about it. I won't even look at it for a month or a month and a half. Then I'll go, wow, there you go.
By the way, is this TradingView what's up there right now?
Yes.
Yep.
And I will say to the TradingView people that there are a couple other charting systems that are thinking about sponsoring us. We can really be good pitchmen when we want to. And this is a pretty nifty symptom. So think about it if you want us to still be talking about it on this.
Yeah.
One other thing, that's about it for the stocks, but I know we wanted to touch on crude.
Yeah, I did.
Oh, for sure. And then Bobby's got a hard out, so we got to hurry up, right?
Yep, that's why. So, I mean, we've pulled back to this support. We've been making higher lows. We broke out to the upside, stalled out just above. We actually had a key reversal day that gapped up and then closed back within the range, and then it just collapsed back down to the trend line. Now, we might be getting a short-term buy setup with cycles at the bottom, but again, we're back to that. Look at this. Look at the magical weekly 200, the weekly 200 SMA.
Wow.
We're right there again. We didn't close below it last week. We closed just above it, but I'm watching. What's fascinating now at this level, this is where things this is why I love some technical analysis, because the 62.5, which
is at the 200,
is right at the weekly 200. You close below this level on a weekly basis, which is, let's just go 71.80. We could see some significant downwards pressure in the short term into the next major support area, which is down around 67.
So can I ask you to do something, Mike?
Sure.
Oh, sorry, go ahead.
Is it legal?
Go ahead.
Yeah, finish your thought, then I'm going to ask you to do something.
No, I finished my thought. My thought's gone.
All right. So on the daily, you pointed out how we broke above that channel. I'd call it a sideways channel, but you can call it whatever you want when you do what I ask you to do. And then you said, and then we had a key reversal. So Jimmy, something Mike talks about all the time is that technical patterns and candlestick patterns and all that matter more when they happen at a specific point rather than the fact that they just happen. So where something happens matters more than something just happening on a technical basis. So Mikey, can you point out that key reversal happening at that particular point, why that mattered so much?
All right, because we had here, I'll put up the, remember, resistance is, support resistance is an area. So we had a major resistance area that was established at the end, mid-November 23, retested the net following week in November, retested the end of November, which really on a closing basis was 78.50 to about 77.80. We came up here on January 26th and we closed at 78.01. We then, on Monday, the 29th, opened all the way above, not above the wicks, but the more important, our key opening and closing prices. We opened above that level and had a wide range bar that collapsed. Not only that collapsed back below the whole resistance levels that should have become support, but we collapsed even below Friday's close and Thursday's wide range bar close. So this was a major key reversal that closed below the last two significant days of up moves and closed well below what should have turned in support. We got a one-day bounce and then another wide range bar closing, really another key reversal bar that just collapsed it.
Okay. So the trade, when you saw it happening in real time, and I love this, by the way, and it makes so much sense when you look at it that way. So the trade would have been when it went below the red candle, but you would have taken some heat on that trade because it was green that day. So it's designed to mess you up and make you think you're stupid and wrong, but it still would have been the right trade. Where would the stop have been on that?
The stop on this would have...
If I would have sold it on that wick on the green day.
If you would have sold it on this day,
bingo.
The stop, the technicals, if you want the tightest stop or the widest stop?
Well, the stop that wouldn't have screwed me.
The stop I like to do, well, I'm not going to just give you a stop that wouldn't have screwed you because we're looking backwards in time. Here's a really...
What would you... Let's pretend we're not looking backwards in time.
I'm giving you a rule of thumb.
Good.
So you can apply this too when I get hit by the bus on my way to Arizona. On a wide range key reversal day, if you're looking for the tightest stop possible, I like to do from the high to the low of that wide reversal day and then look at that 62.5 level, which was 78.21. If it closes above that,
that's where, okay,
I'm out.
Okay. By the way,
it did not. And look how this worked.
When Marigons moved to Arizona, how much sunscreen do you got to use? I mean, Bobby and I need to know.
You're asking the wrong question. I just put my hat on.
There you go.
Oh, fantastic. Michael, do you know what Marigons means?
Do I know what means?
Marigons. Have you ever heard that expression before?
No.
That's what the Italian community always just referred to as everybody else who wasn't us. And that movie Feast of the Seven Fishes, Bobby, did you see it? Where he goes,
I haven't seen it yet.
Joe Pantaleone, the kid, he's going, I'm not going to invite her to Christmas Eve. She's probably got something to do. And he goes, she's a Marigon. She's got nothing to do on Christmas Eve.
It's funny. There's a lot of words that the Italians use. Like that actually comes from Americans, which
Americanos, right? Yeah.
And they just kind of like became American slang words that got kind of jumbled up, but we all still know what they mean, you know?
Marigons. All right. Should we call it? Bobby's got to go.
Yeah, I got to run, guys. Thanks, Mikey.
All right. Thank you.